Are you looking to unlock the equity inside of your house by taking out a home equity loan in order to better your financial situation? Because by doing so, you can build a ton of wealth. Whether you are looking to restructure your debt, invest for passive income, or just invest in yourself, a home equity loan is a great product in order to have your home equity work for you. Now, if you're new to my channel, my name is Evan Phoenix, and this channel is all about real estate education and my journey to financial independence through real estate investing. So if that's something you're interested and you find any value from this video, I'd really appreciate if you gave this a thumbs up. A home equity loan is a loan that you can take out that leverages against the equity you have in your property. Now, there are a lot of ways to have equity in a property, but most typically after you own a home for quite a bit and you've been paying those monthly mortgage payments that lowers your total debt you have on that property, it increases your equity. Equity is the difference between what your property's value is and what you owe on that property. So let's just say you own a $200,000 house and you owe $150,000 on that property. That means that you have $50,000 of equity. And what better way of having that equity just sit in your house than to go and invest that in order to get a return on investment and make that money work for you. To sum this all up, a home equity loan is a fixed loan against the equity in your house. Each bank will have a different lending requirement on how much they'll actually let you borrow, but in terms of everything, it is just like any other fixed loan debt where you are paying towards the principal and interest on every payment you pay towards it, and the period in which you have to pay it back is anywhere between 5 and 30 years. Applying for a home equity loan is actually very simple. The first step is to reach out to a bunch of banks to see their lending criteria, aka you're just trying to see how much they're able to lend against your equity. Typically, the higher amount that they can lend you, the better the situation is because you have more money to go and use. But with that said, you do want to have the interest rates come in factor as well. Now, this should go without saying, but applying for a home equity loan is just like applying for any type of loan. You have to have good credit, you must have stable income, and meet the bank's criteria as far as debt to income ratio as well if you want to get approved. But basically, right after you pick a bank, you agree to their terms, sign all the paperwork, they will schedule an appraiser to come out to the property and appraise to see what the current fair value is of your property. And based off of the appraisal that comes back, they will determine from there how much they're able to lend to you. For example, if the appraisal comes back at $300,000 and you owe $200,000 on it, that means that you have $100,000 of equity. But if the bank only allows 85% loan to value on their lending, that means that you can only take out a home equity loan of about $55,000. Once the loan is finalized, all the documentation is done, the appraisal is back, and you agree on all of the terms, you basically receive a lump sum that gets sent straight to you. And once you receive that payment, congratulations, you are now responsible for paying it back. I think it's really important to note that the home equity loan itself is secured by the property, meaning that if you cannot pay back for some reason this home equity loan, then they could potentially take away your property from you. So make sure to be very careful on how you invest this money, and also make sure that you are pulling out an amount that you know you can pay back. Now let's go over real quick some pros and cons of a home equity loan. Starting off with the first pro, which is accessing a large amount of funds. Like I alluded to earlier, that equity inside of your house that's just sitting there is doing no good. So being able to go and access those funds, take it out and put it into your bank account is huge, especially if it makes sense to restructure your debt, invest in real estate, or invest in yourself. The second pro is that typically home equity loans come with lower interest rates. Now, typically if you want to go out there and get a loan of any kind through either a credit card or a personal loan, the interest rates would be extremely high, but since you are accessing the funds through your house, they typically give you a better rate. And the last pro I'll be talking about is that it is a fixed rate and that the payment cannot go up or down. Now, if you're thinking to yourself, hey, that's really not that special. Well, if you would have used a credit card, the interest rate would have been extremely high, probably in the 20s, and could be variable as well. If you were to take a home equity line of credit out, that is variable. The reason that the fixed rate is so attractive is because you know what you'll have to pay every single month and there'll be no changes. Now let's go into the cons of a home equity loan, which the first one is risk of foreclosure. Now this one is very obvious. If you take out a home equity loan on your property, that is a lien against your property. So if you cannot pay that back, they can potentially come and take your house away. That's why I stress the importance of knowing what you're getting yourself into and not borrowing more than what you can afford. Moving on to the second one is that there are closing costs and fees associated with a home equity loan. The first one being is the appraisal fee. You will have to pay for the appraiser to come out to your house. Not only that, but all of the closing fees and title work that needs to be done, as well as all the bank fees. So make sure you know what you're getting into and know all of the costs associated before going and applying. And the third but not least is over leveraging. Now, this kind of goes with the first one, but if you are taking out more than what you can afford, you may be over leveraging yourself. And unfortunately, if a hard time comes up to where you lose your job, if you can't make the payment for some reason, they will come and take your house away. So you just want to be very careful about that. Now, my point is not to scare you whatsoever. I just want to make you cautious that this is a lien against your house and you are having some risk against that if you cannot pay it back. So now what you've been waiting for is how can I use the equity inside of my home in form of a home equity loan in order to build wealth? Well, the simple answer is to put that money, invest it, and get a good return on the investment to where it can pay back that loan and then pay you some as well. But let me break it down just a little bit further. In the past, I've actually used my home equity to purchase rental properties, but if I was looking to use a home equity loan in order to fund the down payment on a rental property, I will be looking for a couple of things to happen. The first one is that I would want to make sure that the cash flow that this rental property I'm purchasing provides not only pays for all of the expenses every single month on this property, but also pays for the home equity loan and then cash flows some more. Meaning that I would essentially put that home equity loan monthly payment into that property's expenses and make sure that it covers all of that and then cash flows enough to where I can build up reserves and build up a savings account to where if anything were to happen, I would have reserves in the background. The second thing I would look for is a 12% cash on cash return when it comes to my investment. Meaning, let's say that I took out a $50,000 home equity loan and I put it as the down payment on a $250,000 property. With that $50,000 investment and me personally looking for a 12% cash on cash return, I would need to see $6,000 of cash flow every single month after all expenses are paid and with all reserves accounts being funded. Meaning at the end of the year, that property generates a net $6,000. Or if you want to look at it monthly, it's $500 per month. Now that's not set in stone, that's my personal requirement. Everybody has different requirements based off of their investing goals. Now the last thing I want to look for is make sure that my other income aside from this home equity loan can pay for the monthly payment on it every single month. The last thing you want to do is pull out more than what you can afford. And if for some reason that investment goes bad to where you lose all of the money that you borrowed for the home equity loan and you can't pay back that monthly payment, you're stuck in a really hard place and you might lose your home. Me personally, I want to make sure that I can pay that monthly payment every single month, even if something does go sideways and I lose my initial investment. But building wealth with a home equity loan can happen in many other ways as well, just like restructuring debt, getting lower interest rates to where you can pay more towards the principal every single month, or investing in yourself of higher education to where you get your doctorate and you can get paid more and accomplish your goals. But if you are interested more in real estate investing, you would love this video right here where I go over how I purchased a cash flowing duplex for $0. Don't forget to like and subscribe to my channel, and I will see you guys in the next one. Happy investing.